Welcome to a highly anticipated video on Weekly Profile. Hopefully everybody is doing well. If you've been struggling with finding daily bias, finding weekly bias, when the market is going to end up going towards your actual bias, if you feel like you're taking trades too early and then the market goes actually in your bias later on in the week or later on in the day, this is going to be a video for you. This is a very, very good tool to build a confident bias during the day, during the week, and honestly just giving us a good framework to build trades off of. And that is what Weekly Profile is about. It's having a framework that we can build trade ideas off of intraday and throughout the week, depending on the data given to us on Monday, Tuesday, Wednesday, Thursday, and then of course going into Friday. So what we're going to talk about this I was about to say this week, but today is we're going to go over classic expansion profile, midweek reversal, consolidation reversal, Monday protocol, which is basically what was our focus on a Monday, following expansion, accumulation, negative condition, and also TGIF setup. And a quick little shout out to AM Trades who gave me the inspiration to make this video, especially with just the diagrams used. So shout out to him. But yeah, let's jump in and let's get into the first profile, which is a classic expansion. Now, a classic expansion is basically, if we look to the bearish example here, Monday normally will open up, we'll have some sort of accumulation. If we end up Monday putting in the high, we'll then have Tuesday expansion, Wednesday expansion, Thursday expansion, of course, toward the downside. Normally, this is when there's some sort of draw on liquidity lower and we're looking to see a move lower. And then Friday, we see a rebalance back inside the range. So either Monday, Tuesday puts in high. In the bullish example, again, Monday, accumulation, possible manipulation. Tuesday, we put in low of week. Wednesday, expansion higher. Thursday, expansion higher. And then Friday, we normally will see a pullback inside of the initial range from the expansion move. And a lot of the times, the imbalance that's created from this displacement move on Wednesday or Tuesday, Wednesday, Thursday, will normally try to rebalance back in those fair value gaps. Because again, there's four reasons why markets move, right? We hunt liquidity, we rebalance the inefficiencies, we rebalance the equilibrium, and we generate liquidity. So a lot of the times the market will end up pulling back to that inefficiency that we created from that expansion move. Now, what does this actually look like on a daily? So this is what the daily will actually look like. If we look at the open, high, low, close, this is what the weekly candle will look like. So all of these enveloped daily candles open this weekly candle. So this is open, high, low, close. The week opens, we put in a high of the week. This is how the wick. Monday opens. Normally, this is when we're looking for manipulation, some sort of bigger time frame PD array, some sort of fair value gap, order block, breaker, whatever it is. We're looking for a higher time frame PD array here, right? Thursday, we see an expansion. Wednesday, expansion. Thursday, expansion. Again, all towards the drawn liquidity. So normally what we're looking for classic expansion is Monday and Tuesday, we're looking for manipulation in a bigger time frame PD array against the drawn liquidity. And then in the bearish example, we see a move lower towards the drawn liquidity. And then Friday, we close back inside of the range. Bullish example, same thing. Monday opens, we're looking for manipulation in that PD array. And then Tuesday, Wednesday, Thursday, we expand towards the drawn liquidity. And on Friday, we end up closing back inside of the range. Now, what's important about these profiles is we need some sort of protocol to understand, is this actually what I'm looking for? It looks like it might be an expansion, because this is kind of the biggest problem of what people are looking at. They don't have the confidence to know what they're looking for, because again, it's Monday, Tuesday will give us information, and then having the confidence to go into Wednesday and say, this is the profile for the week based off of what we looked at. So this is what the protocol looks like for actually building that confidence. So first thing is, if Monday opens and we engage in a 1 hour PD array or a higher time frame PD array, and we have a change in the state of delivery on a 1 hour, we can classify this as a classic expansion. If we're in a bigger time frame PD array, we have a drawn liquidity on the bigger time frame, and we get a change in the state of delivery on a 1 hour time frame, we have a classic expansion. The second protocol is we study the Monday range. If Monday ends up building consolidation and there's no form of manipulation, there's no displacement, there's no change in the state, we then study the Tuesday range. If Tuesday manipulates Monday high, and we engage in a 1 hour PD array, and then have a change in the state of delivery, we can expect to see a classic expansion. Now, what would void the profile is if Monday opens and we just expand straight towards the weekly draw. If this is the case, there's no trade, right? Because there's no profile, there's no structure, there's no manipulation, there's nothing that told us that we wanted to go lower or go higher, and the market just ended up opening and we blasted toward that area. At that point in time, there's no trade for us. We shouldn't care what the market does. We shouldn't care if we just pumped 150 points, whatever it is. There's no trade for us and there's no profile. So this is most time when we get unfavorable classic expansion profile and the profile is voided. Now, this is what the actual chart will look like if we're looking at a 1 hour time frame. So we have some sort of higher time frame PD array. Monday and Tuesday open up. We're looking for manipulation in this area, SMTs, and then we're looking for displacement of the downside. So if you see right here, we have a series of down closed candles. Can I draw on this? Let's pull this up here. A series of down closed candles here. We end up closing below. We end up having a fair value gap here as well. We pull back into this fair value gap and we're looking to see an expansion the rest of the week towards the downside. And then of course on Friday, we end up pulling back inside of the range and having a move back higher. On Tuesday through Thursday is when we see this expansion move. Draw on liquidity, Thursday, Friday, we move back inside the range. Same thing with the bullish example. You can see we generate all this buy side liquidity. We manipulate in some sort of bigger time frame PD array, right? This is when we're looking for possibly, an SMT here. Come on. Oh my goodness. Let me just do this over again. This fucking... So this is what the classic expansion looks like on a 1 hour time frame, right? To the left, we have our open, high, low close of the weekly candle. Monday, Tuesday, we're looking for a move into a higher time frame PD array. After that, we're looking for a change in the state of delivery to actually confirm this as the weekly profile. So what is the change in the state here? Well, if we see the series of up close candles, if we take this to the left and we end up closing below this, you can see price pulls back into also this fair value gap and then continuing to have an expansion. If we look to the left right here too, Tuesday through Thursday is when we're looking to see an expansion back towards the downside, towards the draw on liquidity. And then Thursday, Friday, on Friday, we expect to see a pullback back inside of the range. And that is when we get our finished of classic weekly expansion. On the bullish example, same thing. We move into some sort of higher time frame PD array, most likely a 1 hour. We're looking for a 1 hour change in the state of delivery. Series of down closed candles right here gets closed above. We pull back into this 1 hour fair value gap and end up seeing an expansion Tuesday to Thursday. Friday, once the draw on liquidity has been taken. If the draw on liquidity hasn't been taken, we could maybe expect to see continuation. But normally Thursday, Friday, once we end up opening Friday, we expect to see a move back inside of the range that we created from the expansion moves. So biggest takeaways with classic expansion is we're looking for higher time frame PD array, 1 hour change in the state of delivery. Is it in favor of the draw on liquidity? Where are we in the charts, which we'll get into in another example here soon. We'll get some more diagrams going. But first of all, keep this in mind. Let's jump into the second profile, which is the midweek reversal. Now, midweek reversal, we'll have for the bearish example, Monday opens, Tuesday moves lower, Wednesday manipulates Monday high, and then we see an expansion Thursday, Friday, Wednesday puts in high of week, and we see an expansion at the second half of the week. Bullish example, same thing. Monday opens, Tuesday move higher, Wednesday manipulates Tuesday, Monday low, and we expect Wednesday, Thursday, Friday to see an expansion back towards the upside, again, towards the draw on liquidity. What does this look like? This is what the daily candles look like. Again, to the right, we have our open, high, low close of the weekly. Bigger time frame PD array, Monday opens, Tuesday opens, Wednesday opens, boom, we manipulate Tuesday high. We see distribution. Again, this is when we are looking for a 1 hour change in the state. We see Wednesday distribution, Thursday distribution, and Friday distribution towards the draw on liquidity. With the bullish example, same thing. Monday opens, Tuesday moves lower, Wednesday manipulates Tuesday low. This is when we're looking for an SMT from these lows. We're looking for some sort of divergence and smart money reversal. And then Wednesday, Thursday, Friday, we see an expansion again towards the draw on liquidity in the bigger time frame of what we are looking at. Midweek reversal protocol, same thing. First thing is we study Monday, Tuesday consolidation or retracement. If Monday, Tuesday has consolidation or a retracement, which means we have some sort of bigger time frame that we are moving into, right? For example, let's say we have a bigger time frame PD array. Monday opens, we start to move higher. Tuesday opens, we also start to move higher. And then Wednesday, we have our change in the state. We then see Thursday, Friday, and see a move towards the downsides, right? So we're retracing. This is sell side or buy side of the curve and then sell side of the curve on the market maker model. So we're studying the consolidation of Monday and Tuesday or the retracement. If we engage in a higher time frame PD array, right? Higher time frame PD array, and then we have a change in the state, we then can expect to see a midweek reversal. Now, the second type is we study the Wednesday range. We study Wednesday range if it is a continued consolidation. We study Tuesday range if there's no manipulation, if there's no change in the state, we void the profile and there is no consolidation or there's no midweek reversal. Monday, Tuesday, if we expand towards the weekly draw and there is no manipulation, there's no change in the state, we don't have an engagement on a bigger time frame PD array, we also void the profile, right? So here's what midweek reversal looks like on the 1 hour. Monday, Tuesday, we build accumulation, right? What are we actually doing here though? We're generating sell side liquidity, right? We're generating sell side to then have manipulation of Monday high, right? Monday high, Tuesday high. Wednesday ends up manipulating both Monday and Tuesday high, again, in some sort of bigger time frame PD array. And then we look to see a move back lower. We have a change in the state of delivery, and we then continue to expand the rest of the week. We pull back to this fair value gap, hold bearish, and continue again towards the opposing draw on liquidity. And then of course Friday, maybe to see a retracement back inside the range. But how can we just by looking at this chart, there's multiple examples and multiple frameworks that we can use to take a trade using this midweek reversal. Just by looking at this chart, the two things and the two main trades that I would be looking for is by, number one, identifying the internal model, meaning this move right here being sell side of the curve. Once this Monday, Tuesday high gets taken, what am I looking for? Well, I'm looking for maybe an SMT, right? A divergence between assets. Maybe NQ takes Monday high, or an ES does not. And then I look to zoom in and I take the internal model, right? Because then Monday and Tuesday low become my draw on liquidity for this internal model. Another trade I could take is the continuation going into Thursday, Friday. If we pull back to this imbalance and I'm expecting to see a continuation, I'm looking for this model, right? Sell side of the curve from this imbalance. I'm looking to see market pull back into this fair value gap and look to see a continuation towards the downside, again, towards whatever the bigger time frame sell side level is or draw on liquidity. Same thing with the bullish example. We generate buy side liquidity. First things in Monday, Tuesday, we manipulate some sort of higher time frame PD array. We have a change in the state of delivery, and we end up seeing a continuation rest of week towards the external draw on liquidity. Again, this is what I'm looking for. SMTs on the bigger time frame. NQ takes the low. ES does not. Look to see a change in the state and look to take a move back higher. Now, here is another example of a midweek reversal, because when we go back, right, we can talk about either the consolidation or retracement. So when we look at this, this is consolidation, right? Because we're generating liquidity, we move higher, and then we continue. This is the retracement. So you can see it's a little bit less clear, right? Because there's no really internal model. There's not a lot of generated liquidity. It's just a move higher and then a move lower. And this is how the weekly candle ends up closing. We have a big wick, and then we end up selling back down. So on Wednesday, we still have our manipulation. We still have our change in the state, and we see a continuation, right? So Monday, Tuesday, we end up moving higher, retracing into some sort of, again, bigger time frame PD array. Let's say there's a fair value gap or something, and we see a 1 hour change in the state. And again, different frameworks to take this trade using our weekly profile is if I see we have a 1 hour fair value gap, I'm going into the day and I want to see manipulation in this imbalance to see if we can see a move lower. Look and zoom in, take the internal model, and look to see a rollover towards, again, the external draw on liquidity going into Thursday, Friday. Same thing with the bullish example. Move lower, rebalance into some sort of bigger time frame PD array. I'm looking for SMTs. I'm looking for displacement back inside the range. 1 hour change in the state. We close above this internal high from actually these series of down close candles. And we end up continuing to see a move Thursday and Friday for the rest of the week in the direction of the draw on liquidity. Now, we want to avoid consolidation midweek expansion if there is no manipulation. If there's no manipulation, there is no participation. Meaning, if we are accumulating Monday to Wednesday or to Tuesday, and we're generating all this lows and we're generating on the sell side, I am not taking a trade if there's no manipulation, right? We have all of this generated buy-side liquidity that we don't end up taking. Now, if there is an SMT here, that's fine. If we have an SMT from these highs, that's okay. That's considered manipulation. And then this would be my change in the state, and we'd see a move lower. If there is no SMT and there is no external high that is taken in the opposing direction of the draw, and there is no imbalance that gets tapped into on the bigger time frame, there is no trade here. There's no trade. There's no profile, and there's no opportunity. Now, there still might be internal opportunity, but there's no profile to build conviction and really have confidence of what the market wants to do. Because if I'm looking at this, and I don't know what the weekly profile is, and I'm looking at this chart just from where we are going, let's say here on Wednesday or Thursday, and I just saw sell side get taken and all of this generated buy side liquidity, I don't expect to see a continuation. I'd want to see a reversal back to the upside, right? So if there's no manipulation at the highs at the start of the week and there's no SMT at the highs or the lows, there is no midweek reversal and there's no profile. Now let's get into the next profile, which is a consolidation reversal. Now, consolidation reversal is when we normally will put in a Thursday high or low of the week, and we'll see a big move back on Friday. This is kind of like a seek and destroy profile, basically for the week, if you know what seek and destroy is for the day. Monday basically opens, Tuesday high, Wednesday back, Thursday back, right, takes Tuesday, Wednesday high, and then we move on Friday towards the draw on liquidity. Same thing with the bullish example. Monday opens, Tuesday puts in low, Wednesday moves higher. Most of the time, we're going to take out Monday, Tuesday high. Thursday goes all the way down, takes out the low of week prior, whether it was Tuesday or Monday, put in some low of week, and then we see a continuation on Friday towards the upside. Now, this is what consolidation reversal looks like on the weekly, is we'll have Monday, Tuesday, Wednesday. Thursday is when we will manipulate Monday, Wednesday, or the previous highs of the week. Again, some sort of bigger time frame PD array that we are manipulating. This is when we're looking for some sort of higher time frame SMT. We then zoom into the 1 hour. We're looking for a change in the state. And again, opposing the draw on liquidity. We're looking for manipulation in the opposite direction. If we're draw on liquidity is lower, we want to see a move higher, taking out some sort of buy side level to then see us roll over and target the draw on liquidity. Same thing with the bullish example, Monday, Tuesday, Wednesday. Thursday, accumulation. Thursday, sells off, takes Monday and Wednesday previous low, manipulates into some sort of higher time frame PD array. And then Thursday, Friday, we end up seeing an expansion towards the upside, targeting the draw on liquidity. Now, what is the protocol for this? Well, Monday, Wednesday, if we are having an internal range and we engage in an external range, and then we have a change in the state, we can classify this as a consolidation reversal. We're looking for manipulation from Monday to Wednesday highs or lows. Monday to Wednesday, if we build an internal range and it remains an internal range, right? It remains an internal range, meaning there's no manipulation, there's no displacement, there's no profile. Now, here is what this looks like basically, is we'll have Monday to Wednesday, continue to consolidate, right? We build a lot of structure here. We generate buy side. Going into Monday, Wednesday, Thursday, we end up manipulating some sort of higher time frame PD array. This is what I'm looking for. Again, an SMT. We get a change in the state of delivery, last series of up close candles, and we see our continuation lower. Again, how can we take advantage of this? Either from this position up here once we originally take buy side to then move back inside the range, or we take the following move to then continue the expansion again towards the draw on liquidity. And a lot of the times it'll be the draw on liquidity will be the actual previous session Monday, Wednesday lows or highs that we ended up creating, that we see a continuation the rest of week from Thursday to Friday. Same thing with the bullish example. At the start of the week, we're generating, right, all this low resistance liquidity on buy side. Thursday manipulates, low gets taken from Monday through Wednesday. We're looking for a rejection of some sort of bigger time frame imbalance. We're looking for SMTs, change in the state of delivery, and we see a quick move Thursday through Friday back towards the upside in favor of the draw on liquidity. Now, I want to talk about Monday protocol rules and expectations, because a lot of the time, our biggest thing we want to focus on, avoid Monday participation. Now, this is a mixed bag because a lot of traders say, don't trade on Monday, don't trade no news Mondays, or, it's totally fine, you just don't know what you're talking about. I'm going to be completely honest. It's up to you. It really is up to you. My recommendation to you is build your own data. Some traders trade Monday and are successful. Some traders trade Monday and aren't successful. It all depends on what you prefer and how you trade specifically. For me, there's sometimes days where I will trade Monday and I'll look at the market, and there's other times when I won't. It all depends on where we are in price action. What am I expecting for the week? Is there news going into Monday? All of these things matter. So the biggest thing for weekly profile is if you are just basing an idea off of weekly profile, you avoid Monday participation because there's no data yet, right? Weekly range accumulation, we lacked high impact news on Consolidate, or we lack high impact news on Monday. A lot of the times we will accumulate and we'll just set up structure for the rest of the week. Now, weekly range Judah swing, a lot of times we'll have an opposing direction in the draw on liquidity. We'll have a move lower, and then we move back higher to then go lower later in the week. So what this basically is if Monday opens and we just see a move towards the draw on liquidity, doesn't get taken, and then retrace back up, this is a Judah swing for then later in the week to move back lower. But I need more structure to be able to take that trade, right? I don't want to catch a long side here because it's in the opposite direction of the draw. I want to see a move towards the draw once I get clear manipulation in some sort of bigger time frame PD array here, right? Now, study Monday daily range, right? Monday accumulation, Tuesday manipulation is when we're looking for a classic expansion possibly, and we're looking for a low of week. So if Monday opens and then Tuesday opens and we manipulate into a higher time frame PD array, and we then can maybe recognize an AMD, accumulation, manipulation, displacement, we maybe have an SMT, this is when we want to enter the market. We have more data, right? Now, Monday accumulation, Tuesday manipulation premium, high of week. Again, same thing with the bearish example. We're manipulating into some sort of higher time frame bearish PD array, targeting Monday lows, and again, continuation for the rest of the week towards the downside. Monday Judah swing, if Monday reversals in a discount, a lot of times we're looking for a low of week, but there's no structure here. Monday Judah swing bearish example, Monday reversal, rejection of some sort of higher time frame PD array, and we're looking to see it move back lower. But on Monday, a lot of the times, the biggest thing, if I could just summarize all of this, is a lot of the times we just don't have the information for weekly profile. In fact, we don't have the information for weekly profile on a Monday. Depends how you trade. My recommendation to you, be cautious. Now, the next thing I want to talk about is following an expansion, right? If we are basing and we go into a new week, we want to take into account, of course, the information from last week, the bigger time frame PD arrays, and all of these things. So this is a really good way to view weekly profile with more data or more structure to the left of us. If we look at this, we can see last week we had a classic expansion, right? Monday opened, Tuesday manipulated the high, Wednesday expansion, Thursday expansion, Friday closes back inside the range. So now we open a big daily fair value gap. So what could we expect to maybe see the next week for the weekly profile? Well, in this example, we see a Wednesday and midweek reversal. Monday opens, Tuesday opens, Wednesday manipulates inside the bigger time frame PD array. We take Tuesday high, we see displacement, and we expect, again, Wednesday, Thursday, Friday, distribution back towards the downside. Same thing with the bullish example. Previous week was a classic expansion. We opened up a daily bullish fair value gap. We pulled back into this fair value gap. Went Monday, Tuesday, Wednesday. Wednesday manipulates Tuesday low, and we see Wednesday, Thursday, Friday expand off of the daily fair value gap, right? So hopefully you're kind of starting to see these dots get put together here of how we can use weekly profile to automatically just input our already existing bias, right? Because if I'm going into the market and I'm not looking for a weekly profile, I'm still looking for the market to bounce off of this PD array and look to move higher. But now I can actually understand, when is the market actually going to move? Monday, we tapped it. Why didn't we move higher yet? We need more structure. Monday, protocol. Tuesday, why didn't we move higher? We're in the fair value gap. Well, Monday low got taken. There's no change in the state on lower time frame. So we move back lower again. So it's like you take a long, get stopped, take a long, get stopped, take a long. Oh, now you finally go in your favor because you're not looking at the profile. Wednesday takes Tuesday low, and we start moving back towards the upside in the bigger time frame fair value gap. Now, accumulation. Monday, Tuesday for a bearish example, right? Monday, Tuesday, Wednesday opens, we manipulate into some sort of higher time frame PD array, and we see a continuation, right? If we are accumulating on Monday and Tuesday, we are staying out of the market many times. This is when a lot of the times we are getting chopped up, especially when we have an inside bar, meaning Monday opens, we have a high, we have a low, and Tuesday sits inside of this high and low. There's no manipulation on the downside, and there's no manipulation on the upside. If Tuesday does not take Monday high or low, there's no profile. We're waiting for manipulation, and that is when we go into Wednesday to then see where we're manipulating. And if my draw on liquidity in this example is lower, I'm looking for Wednesday to move higher, take out Monday, Tuesday high, and then roll back over to the downside the rest of the week. Same thing with the bullish example. Monday, Tuesday, accumulation. We know touchy. A lot of times you're going to get chopped. Wednesday manipulates Monday low. We're looking for an SMT, something on the bigger time frame. Manipulation, some sort of higher time frame PD array, and we look to see an expansion the rest of the week. Now, I want to talk about negative conditions, right? When are the times that we do not want to be trading, and we do not want to be trading based off of the weekly profile? First, number one, Monday accumulation. If Monday accumulates and Tuesday expands without manipulation, there is no trade. So we can see Monday accumulates. This is the low that gets created on Monday. Tuesday opens and we expand. There's no manipulation from Monday low. Monday sell side does not get taken and we move higher. If there is no SMT here, right? If there's no SMT here, there's no trade. This is a negative condition. There is no trade here. Same thing with the bearish example. Monday high, Tuesday opens. Does not take Monday high. There is no SMT. Even if we sell off, there's no profile for the rest of the week. Monday opening expansion towards the weekly draw on liquidity. Again, a continuation without manipulation. If Monday just opens and we just go straight towards the draw on liquidity and there's no higher time frame PD array that gets tapped into, there's no low, there's no anything that is manipulative or shows us that we want to put in a low there's no trade. No manipulation, no higher time frame PD array. This will always equal low quality framework. You do not want to be trading at these points in time. Same thing with the bearish example. Monday opens, we go straight towards the draw on liquidity. There's no manipulation. There's no higher time frame PD array that gets tapped back into. We don't care. We don't want to touch this. Now, negative conditions for a midweek reversal, right? If now Monday and Tuesday, we have two consecutive up-closed candles and we are trading towards upside weekly objective and there's no retracement, there's no accumulation, and there's no manipulation, there's no profile, right? Because if we're looking for a midweek reversal, we're looking for Monday, Tuesday, on Wednesday to see some sort of manipulation. If Monday, Tuesday just expands towards the draw on liquidity, there's no profile, right? There's no midweek reversal, and that's how we can easily void a midweek reversal. Same thing with the bearish example. Monday, Tuesday, consecutive down close candles. We are expanding towards the draw on liquidity, and there's no retracement, no accumulation, no manipulation, no profile. Simple as that. Now, next thing I want to go over is the TGIF setup. I'm sure you guys have maybe heard of this. If you haven't, it is just an ICT framework that he called TGIF. Thank God it's Friday. It's Friday trade that you can frame based off of weekly profile. Now, we talked about before when we talked about classic expansion, Friday, we expect to see a move back inside of the range. So if we look at the classic expansion here, we can see Monday low gets taken and manipulated on Tuesday. Tuesday, Wednesday, Thursday, we see an expansion into some sort of higher time frame weekly PD array. And Friday is when we see a move back inside of this range. How can we possibly take a frame or framework a trade off of this? Well, if we look at Thursday, and Friday opens and we manipulate Thursday high after a classic expansion, we can expect to see a move back inside of the range. This is when, again, we'd look for a change in the state of delivery and try to take a short targeting back inside the range and targeting, again, the imbalance that was created from the previous expansion. Now, there's also two types of ways you can do this. Keep in mind. Or you have manipulation of Thursday high, or you have a retracement into a Thursday PD array. So if we look at Thursday, and Thursday already started to move back inside of the range, and we have a change in the state of delivery, and Friday opens up and we pull back into that fair value gap or PD array from Thursday, we can then expect to see, again, a continuation back inside of the range. Same thing with the bullish example. Friday, Thursday low gets manipulated. We see a continuation or a retracement back inside the original range from the expansion move, or Friday moves back into a fair value gap that was created from Thursday's initial retracement back inside of the range. Now, this is all I have for you in this video. I actually made an hour-long version of this going in depth. I actually jumped into the charts and showed a lot of examples, but that is for my mentorship. I wanted to give you guys a little bit of information just on weekly profile so you guys can start checking this out in your actual trading. I highly recommend watch this video many times, study it, learn it, and go into the charts and go back test. Go into the charting sessions and go into your trading and go into your charts and just go back somewhere in time. And I want you to mark out Monday, Tuesday, Wednesday, Thursday, Friday, and just play out on the 1 hour. Look at the 1 hour, play out the weekly profiles, look and try to understand what the profile is, right? Look at a Monday. How does the range build? Look at a Tuesday. Does Tuesday take Monday or Monday high or low? Yes or no? Continue to constantly backtest this, build conviction. If you want to watch the actual full video of this explanation of me actually diving into the charts, I'll leave a link in the description so you can check out the mentorship. I live trade every single morning. We do charting sessions every week. We do student sessions every week. I love coming on with my students and trading with them and just helping out. And we have a very long version of this video going more in depth. So hopefully you guys enjoyed this information. Hopefully you enjoyed this video. If you did, make sure to like, subscribe, do all of that good stuff. Leave a comment. What'd you like? What'd you don't like, right? Whatever. Any recommendations you guys have for future videos as well, leave those in the description. Enjoy the rest of your day, and I will see you all in the next video. Peace out, guys.